Welcome to TradeTheNBI.com. This is John. This report is for the 5th of November. Election day is upon us. Feeling a little under the weather. Had a little bit of a fever this weekend. Maybe it's all leading up to this election. So Friday, shot right up to the other previous positive extreme here at 2762, and then traded right back below the previous one as the uncertainty battles in between. Not to mention, we still never got a reset of the steel. So despite the fact that we were in this up move, you've got to have that reset to give you a ability for short-term buyers. Now, of course, new fund money will be starting to come in, so that could give us the bolster that it needs. What we'll be watching for, obviously, is the orange here and the cyan green. Green is now above cyan, so the bull is still in place for now. We can see ATR is fading off a little bit. What's our latest numbers? Still way up there from Houston, 56. So the range of the days can still be quite significant. But a lot of times with this kind of move, you might get as much as a 50% retrace. I'd be looking at that 2684, 23% line right here as a gauge. But you can see the ABM has already started higher from that initial buy configuration that started literally at the 23%. So all decent from that standpoint. You can see here with the Deocon paint on there with the pivots. Shows up nicely that the pivot came in right at the start of that, the same spot, 23. So NQ, SP, so NASDAQ and S&P are right on target with each other. That monster pop in the euro didn't last very long, but it was enough to give the bolstered boost to the S&P, and that worked out just right. And I think what people are starting to see more of is this disparity between the massive job growth numbers and everything in America and that versus the EU, and certainly going to have an impact. But the question then becomes, does it spread, or is it strictly an American phenomenon, because that's where it's been so far, because it's policy changes. And so that warring economy, the threat of rising rates, certainly sending, and we can't see it on the chart. I have to shrink this quite a bit to get to the next retrace value. I think it's in the 105 range. I have to go even further. I think it was like 103.69 is the next spot. We have to go back to 2014. We got close to filling it back then. Is when things really took off for the collapse of the dollar. And this is where we find ourselves right now with a super strong dollar. And oil, obviously, the trade has just fallen apart in the sense that it got way overdone for no particular reason, because certainly there was more than adequate supply to accommodate everything. It's going to start putting a little pressure, because now you've moved to the bottom side of the range. But a lot of people made a pretty good chunk in between, so it's not going to be till next year at the very earliest, at the end of the year, that you would start to see some impact on the decline of pricing. Depends on your area, how they refine. Gold, obviously holding right at this plateau. The clear indications that with wages actually rising for the first time in a while significantly, that potential for significant inflation exists. I know, it's hard to imagine. Look at this craziness. We have to reduce all the way down here to get back to the beginning of the action. And did some pretty good moves here. Really came up super strong. Got all these positive extremes built into there. Didn't even need to mark some of them, because it didn't take long before the sell signals started to come into place after the gold reached their 100%, and then boom. And then again, a secondary one. And I always look at these because they're interesting too. It's where you have the green closes below the red. At the same time, you have cyan jumping, and it was that steel crossing below orange at that spot. And then it didn't take but a second or two, and then boom, into the decline. You can see a lot of this just mess of words here, but if your screen is large enough, and let me just go ahead and start to see the clarity of it. where we were making new lows, and so these bounces, you didn't expect them to provide much. And then a couple of times you ended up with buy configurations, but with no orange dip down, and that just continually led to the cascade. We ended up not having this one, but when you ended up with this pivot right here, it was the secondary return that came down to the 23 that actually produced a decent buy, and then confirmed it with the cyan under. Unfortunately, it was all positive extremed, so literally takes us exactly back to that same 204, 2704. Haven't changed that one in like forever, but we're holding pretty consistent up here. The futures pretty much flat overall. This isn't down 950. It's nominal when you're talking about the numbers that we're at. So all in all, I think that having the ability to see that, and if we expand it, you really get an idea that when these start to conglomerate is usually when we get a little bit more retraces. But every time, in this particular case, we got to the 50%, we had a complete reset, and there's the difference of the cyan the steel staying all the way up, resets here for new buy configuration, and then throughout this consolidation, it's been back and forth resetting. So you're not in a trend mode, which means people are really kind of uncertain, and they're going to be checking their last minute everything poll-wise to make sure that they're positioned correctly for after the election, which should still, regardless of who wins, should end up being a net positive for the market, and potentially our move towards the S&P 3000, which called for way back in the long time ago. So still a little early for that. That's a long way to go, but we'll just keep track of it. As always, though, gonna try and get some rest and see if I can get rid of the fever and be ready to rock and roll. As always, trade well. We'll talk again later.